Hello and good night. So, I wanted to talk about my plans on what I will be doing during a bear market and how I'm kind of preparing for it. Mostly mentally, because I don't have too much money to do it actually financially. So, just thinking about my game plan and what I would sell and what I would keep. So, first, what I plan on doing during the bear market is just buy what I already have been buying. The difference between a bear and then, of course, a bear in a bull market, of course, is that all your stocks are going up. Everything looks good. There's no problems. You've made all the right choices. Everything's in green. It could never go down. Things like that. But then in a bear market, then you start to really start thinking about your choices, second guessing yourself. Did I make the right move on Tesla? Damn, I shouldn't have YOLO'd because I'm still alive. And holy crap. And I got to deal with that. So making those YOLO moves that were probably pretty risky and then not getting out of them in time or not being able to get out of them in time for one reason or another. Um, you know, taking that money and not doing things with it that can actually make you money in the long term so you don't have to keep on quote unquote trading. So I'm thinking about what I'm going to do once this market starts to go into a downturn. Uh, last mindset video based on finance, I talked about doing a YOLO move and it making and taking that money and putting it into things that can actually better your life and put you in a better position. Because basically, the biggest thing in terms of taking advantage of opportunities is being in the position to do so. One thing that is very important that I learned from the book The Richest Man in Babylon. I'll go ahead and link the video or the audio of that book in the description. It's a 4-hour listen and it's great. I definitely recommend that you listen to it. And in the book The Richest Man in Babylon, which is I believe it's a fictional tale, but in it talked about good luck and good fortune and how good fortune or luck has not so much to doesn't have much to do with it. It's more or less that you put yourself in the position to take advantage of an opportunity that presents itself. Opportunities will always present itself. Opportunities will always be there and actually show up when you least expect it. But the thing is, you have to do the work beforehand to ensure that you'll be ready to actually take advantage of that opportunity. For instance, you have a sale that's going on at the store or what have you, and you have a little extra money because you put money aside and saved. You may have a stock that actually is not doing well. You look at its fundamentals and you say, hey, listen, nothing's really changed with this. The earning reports are looking good. Everything's just in red. I mean, if I look at the S&P 500, I look at the NASDAQ, I look at all these different markets or these different market indicators, and I see there's not much difference. There's not much difference from yesterday and today, or even last week. This company isn't doing anything worse. There isn't any news that comes out for this company that says, hey, this company is a bad company and it will never do well ever again. Really, it's just that everything is being, maybe there's a short squeeze going on and everything is going to go down because of it, because now they have to sell off things like Tesla. They have to sell off their best performing, high performing assets just so that they can cover all of their other shorts that are being called in. So they have to buy back all these shares and things like that at the current market value, whether it's good for them or not, or they get, shut down. So this is the opportunity that a short squeeze or a big market move actually makes available to you. These are things that are very important that you want to be able to, or you want to be ready to take advantage of. For instance, if I have my portfolio and I believe it's well balanced or it's not balanced enough, what I'll probably do, because I use a robo-advisor M1 Finance, but what I'll probably do with M1 Finance in that case is look at what I have and say, okay, I'm going to take this extra money here, either rebalance the portfolio or the pie in M1 Finance terms, and I'll take that portfolio or that pie within the portfolio and put a little bit more money into it so it can balance out. Put it into the portfolio and not just into one stock or security or ETF or anything else like that. I'll just put it into that one sector, and then per all my percentages, what's underweight will get the most money. What's overweight will get no money or little to no money. So, if anything, I'm looking at this market and what's happening, and I'm trying to put myself in a better position. Right now, I'm not in the best position, but trying to put money aside, save up, get ready for any type of market downturn or fluctuation, some volatility in the market. If you know the same stock is not doing any not doing any worse fundamentally or qualitatively, then why not put more money into it? Especially if you're looking at it from a long-term perspective. If you're looking at it from a trade perspective, then yeah, get out of it. It doesn't really make sense, right? Like, why would I stay in that? But if I'm looking at something for a long-term perspective and I'm saying, hey, I'm going to hold this for a year, 5 years, 10 years, and this is for my retirement, then why not just buy more of it? That's just how I think, and that's my mindset in terms of that. So when I'm looking at all these different stocks, and if I can actually take those stocks and or take that money and put it into something that's going to make me more money over time, such as a dividend producing stock, then I'm going to do that. Or stocks that I feel that will actually do well into the future. Your Qualcomms, or your boring companies in a sense, are the ones that people are forgetting about. I did very well with Uber and Lyft, where they were companies that, of course, didn't do too well during the whole during the beginning days of COVID-19 and the lockdowns. But I was like, these are things that are really a public good, if you will, and that should stick around as long as they can hold on. And these companies are doing things such as delivery services in terms of Uber, and also artificial intelligence and self-driving such as Lyft and Uber as well. Lyft more so. They're focusing, I think, a little bit more on self-driving and delivery and things like that. So if I look at these different stocks and I'm saying, okay, hey, listen, while no one's watching these, I'm going to buy these up, or I'm going to do a little bit in them. And then that really helped because now I'm probably, I think, $800 up on Uber. I'll probably even $800 up on Square as well. I don't have my portfolio in front of me, but I've done fairly well on those. I've also done very well on Qualcomm, AT&T, Oracle, Cloudera. I'm hoping in the long term, some of my realty REITs, my REITs, my realty stocks will do well, such as Equinix and Digital Realty Income Corp. Those are REITs that are they mainly work in the colocation data center space, and that's the space I actually used to work as a NOC technician for years, and I kind of saw the inside and how those things work, and how really they've gotten so stable that literally they're boring stocks and they're fairly stable in terms of how they build it. Like, they're pretty stable and actually growing, and they're actually building more and more data centers. People are moving things away from the cloud or in and out of the cloud, or doing hybrid deployments. So something like Digital Realty Income Corp. I think it's Digital Realty Income Corp. I'm sorry, Digital Realty. I think it's like DLR. And then Equinix, which I believe is EQIX. But I think it's like how you spell it is EQUIX. I'm so off. Don't worry about it. But Equinix. It's bothering me. Hold on. And for those that don't like typing during videos, forgive me. It is what it is. Do you want to get this part right? Yeah, Equinix, EQUINIX. Ticker symbol is EQIX. So Equinix is another company that I feel that will do well in the colocation REIT space going forward, and will actually stand the test of time. I could be totally wrong about that, but that's my speculation on it, knowing what I know from the inside and how those companies will shed companies and shed different data centers if necessary, and then build even more data centers in markets that actually make sense. And they're very profit driven in terms of their revenue and then all the services that they offer. in terms of like what being myself being eaten up, or the company that I was working with being eaten up probably about 2 or 3 times during the time I was there, and how those companies like to grow to larger companies if and when possible. So, in turn, and pretty much in summary, how I'm going to handle any type of downturn or bear market is by just investing in what I already actually have and what I believe in. In terms of my stocks, I've already consolidated and gotten out of quite a few different positions, and I'm feeling confident in my newly focused portfolio, and I think it's going to do well for me into the future. And if there's any problems with it in terms of the bear market, I will make adjustments where needed. But for the most part, just keep throwing money into the pot. In the long term, it should do very well for me. Never know, but that's how I'm going to do it. As always, if you're not taking my opinions, thoughts, outlook for anything with a grain of salt, then you're low on sodium. Please do research, look around, look at some of the links that I put in the description. These are things that I read, watch, mostly because I hate reading, I'm not going to lie. But things that I read and watch that help me in terms of my investment, and in terms of what I would actually tell even my own nephew, who I send these videos that I mainly make him for. He's my main audience. But these are the things that I would tell him and anybody else that actually would listen to me on a regular basis in terms of any type of like thoughts in terms of investing and how I handle things and how I move. As always, thanks for listening. Peace.